Hey everyone, welcome back to the Your Money Life podcast. We're in episode 330 of the pod. We do this every week, so do me a favor, like, subscribe, five-star rate, and review this podcast. We have a decent amount to get into. We will talk about the markets. We will talk about some interesting business stories this week. Maybe even talk the NBA Finals. Game one was yesterday. Knicks ended up winning. I did not have that on my bingo card. So let's jump right into the podcast and talk about the market first and foremost. So the market has had an interesting year, but it's been mainly positive. The past 5 days, we actually are flat to a little bit lower on the S&P 500 in the last five trading days. Yesterday was the most pull correctional day of the probably of the past week or so. Down about seven, three quarters of a percent yesterday on the S&P 500. Over the past month, we're still up over 4%, nearing 5%. And year to date, the market's up 10% if you just look at the S&P. If you look tech heavy indexes, you're probably getting in the mid double digit growth year to date. 1 year out, it's a really, really positive look for the market. So a correction was due. Many people are starting to call it, which tells me that we're not there just it may not be just yet, but if you get exuberance in the market, people screenshotting accounts and showing how crazy things have gone, then it might be time for us to call for a correction in the sense of there might be people pulling chips out the table. Let's go into like actually what's driving it. So the first thing is we do still have some earnings. Broadcom went 13% lower after they missed on their revenue in their earnings report. CrowdStrike fell 10% after giving a lackluster revenue guidance on their quarterly report. Semiconductor names, which are one of the big pieces on leading the market higher, they've fallen a little bit yesterday. On the trading day, you had the Van X Semiconductor ETF, SMH, ARM Holdings, Micron Technology, and Marvel Technology have all been lower a little bit this week. There is some still tension in the Middle East. There are still issues between Iran and us, obviously US. And so that's one thing that you have to keep watching. So keep watching the oil prices. The Brent crude oil indexes and prices. You're gonna keep watching that. So those are the big themes still. We'll still get some data from economic data that's going to be coming out over the next several weeks too as well. That'll be interesting to watch. So those are the main themes of the market. It's rather slow. Summer tends to be slower when it comes to trading. You don't want too much volatility in the summer. Most people are going to be taking summer vacations at some point. Traders, investors. So we'll see if that is a theme as far as a slow summer as we just kind of ramped into it. But nothing too crazy. Again, the last week about flat. That just tells you that it's nothing crazy so far. So far, the pre-market's trading a little bit lower, so we might have a lower day on the S&P and the Nasdaq, but the Dow is a bit higher. So let's talk actual news that came out. Bitcoin, another obviously interesting asset that we've always been a proponent of holding. My average entry on a personal basis is fairly low, way lower than what the price is today. So Bitcoin, they're saying extended a downward trend, marking a continued divergence from the record rally unfolding across technology stocks. In fact, the token has lost more than 25% of its value this year and about 50% since its peak in early October. This week's sell-off alone wiped out 160 billion in market value. This is according to Bloomberg. So again, doomsday articles are starting to come out about Bitcoin now. That's actually a positive sign in my mind in sense of the buyers and holders. You're going to see a lot of doomsday articles. People say, "What happened to Bitcoin?" No one's talking about cryptocurrency anymore. There used to be a continuous ticker on CNBC. I don't know if that was 2023, 2021, but there was a continuous Bitcoin tracker on CNBC that has been long gone. My point is the more bearish people are, the better as far as this bear, right? Bitcoin has its cycles that is pretty easy to track. Bitcoin and cryptocurrency in general has these cycles that are pretty easy to track. They're usually 4 year cycles. So as you can see, you'll see a lot of nothing. This is so we can track it here for those watching on YouTube. We'll see a lot of nothing. Let's say we just came out of cycle. That's the peak. Then you'll see the reversal, the bear, a lot of nothing for a bit. Another peak, reversal, the bear, a lot of nothing for a bit, another peak. So we are still in the reversal and bear phase for another few months. Think of like October-ish time frame later in the year where you'll see exuberance come out. You'll see the price start to rise again. So for those people that are just buying and holding, that's what you want to do. Or, either adding to these positions or being patient, buy and hold. I think it's no problem to add at these positions if you're adding a little bit to your portfolio, because again, this is not going anywhere. It'll be downtrodden and people won't talk about it. And there'll be a lot of negative news and articles until the resurgence comes later this year. So that's something to note. Um, and yeah, that's pretty much the history. It's really something that has a very cyclical, easy to track cycle for people that are really, really interested in the cryptocurrency world. So keep your eyes on that. Let's look at the Fed's beige book. So the beige book, of course, is the survey that tells how the Fed, in deeper dive, how they're looking at the economy and how they're looking at projections for interest rates. They said that inflation continues to put pressure on the economy, and this is according to the Fed's latest Beige Book survey. Business outlooks for the next 6 months were reported to have little change in anticipated growth. This is noted by the Fed amid signs of a weakening consumer. The report cited energy costs related to the Middle East conflict as the primary driver of inflationary pressures. Higher income consumers have been less sensitive to rising prices, however. So pretty much saying higher income doesn't really care if gas prices are up a few hundred extra dollars a month on average, or whatever the average is, right? They don't care. Versus on the lower end, consumers are feeling a lot more pressure as well. So that's something to note. The Beige Book really dispels and tells us how the Fed is looking at the economy and how the economy is, doing on a backward-looking basis. So that's something to note. They could. The big thing is, how these energy prices are going to look. Like, let's even take a chart, look at the Brent crude oil if we can. What are we trading at? So it's still at $97 a barrel. Um, and so we've come down a little bit from the peak. Obviously, we come down way from the peak of late April, and still jostling around a much higher level than we were in February and early March, which was like $70, 71, even in the 60s, right? So we've really come up, and that's really going to affect the consumer as we get into summer travel time. Airline prices will have to increase to combat the fuel costs. Even drivers thinking about doing cross country or trips or any of those sort of things, it's going to have an effect. So that's the one thing that we must kind of keep our eyes on as well. Let's take a look at Nvidia. Nvidia had another strong quarter, if I'm not mistaken. Nvidia CEO highlights insanely profitable AI returns. So Jensen Huang spoke to institutional investors and family offices this week in an effort to ease concerns about a possible AI-driven market bubble. This is an event in Tapai. He highlighted the profitability of AI, saying it is now insanely profitable and pointing to the trillions of dollars in value the technology has created. His comments come amid growing scrutiny of big tech's massive spending. So yeah, I mean, here's a thought process. People are saying that it's just AI, big tech companies that are pretty much pulling the market forward at insanely frothy prices. You know, so here's the thing: it's on a short-term basis, people may think that. On a long-term basis, I know that it's false, because the value is going to be driven by AI. The value is going to be driven by tech. The value is going to be driven by those large, insanely large companies that have pretty much all the consumers, all the data. That's really going to be what drives forward. That's really going to be what drives the market forward and what drives the economy forward in the future. So now and in the future. So if we're looking at QQQ, which is a heavily tech index, their biggest exposure, top 10 holdings in QQQ is Nvidia, Apple, Microsoft, Micron, Amazon. I'm assuming Google's in there somewhere. Yep, Google. It's the same, it's the top holdings. So if you look at that and then look at year to date up 20%, on a year basis up 42%, it's just driving and pushing the market forward. So people are starting to say, okay, is this too frothy? Are we in a bubble? People have been calling for a bubble a while. What is a bubble? A bubble is only a bubble if there is no value, no new buyers, and I just don't see that. In the short term, there may be corrections, which is totally normal. But in the long term, these are where the value is going to be driven. It's going to be driven in AI. You have SpaceX IPO, which did we talk about that? You have Anthropic IPO coming. Those are $1 trillion IPOs that are coming to the market. Incredibly, insanely huge. $1 trillion IPOs, insanely huge. That wasn't fathomable 10 years ago. Besides Saudi Aramco, I don't know if they I think they were $1 trillion IPO. Now you're having $1 trillion IPOs in AI companies. Anthropic, SpaceX's AI and space, all molded in. I think he even put Twitter under SpaceX. He's going to fold everything under one company. That him being Elon Musk. You have OpenAI doing an IPO soon. They filed a confidential S1. So all these companies that are coming to the market are getting $1 trillion valuations, mainly AI companies, printing hundreds people that are going to be hundreds of millionaires, hundreds of billionaires, well, several billionaires, hundreds of millionaires, several hundred deca millionaires, and things of that nature. So there's people that are going to be up $100 million from these IPOs. So point is, it's where the value is, and so if there's a loss of value, or if it's not proven there's a value or profitability, then that will be the issue with it. But there's just not going to be proven. It's going to, at a long term, that's where everything is flowing. It's flowing to AI and technology. So that's going to be the big thing to look at. So here, let's talk about SpaceX IPO. JP Morgan's Jamie Dimon is going to make a personal pitch for SpaceX IPO. He said he will host a call with more than 2,500 of the bank's wealthiest investors Thursday to discuss the SpaceX IPO. It's going to be a live, interactive discussion. It will take place at JP Morgan's headquarters. It will be simulcast at 90 of the bank's locations in 26 states. Dimon will be joined by SpaceX President and Chief Financial Officer, among others. This is the roadshow event is notable for its size and for its direct outreach to retail investors who are considered key to SpaceX's goal of achieving a $1.8 trillion valuation. So he's pretty much, if you think about what the investment bank has to do here, they have the job of promoting this IPO, initial public offering, to investors, to family offices, institutional investors, and to retailer investors, to show why it's a good investment for these people to jump in and buy the shares from the bank that they purchased logistically from SpaceX, to then now send to have new investors into the company. So, and they're looking at a $1.8 trillion valuation. Think of that, $1.8 trillion valuation of a newly minted company. If you look at something like Google, which I think is battling with Nvidia for the highest market cap company, which is crazy, it has a $4.3 trillion valuation. We're talking trillions. There wasn't even $1 trillion companies 5, 6 years ago. Apple hit the mark. When did Apple become? uh, Let's look at the who was the first $1 trillion company and when? Apple became the first publicly traded $1 trillion company, achieving the milestone on August 2nd, 2018. So yes, not even 10 years ago, we didn't have $1 trillion companies. And now an IPO company is becoming into the market as a $1 trillion company. Think of that. That there is a point there for the people that are thinking that the market is frothy. It's understandable because you're just seeing so much money being poured into and minted in these areas. But it's concentrated. It is concentrated, and it's going to continue to be concentrated in tech, in AI. That's just the way things are going to go. That's where consumers are going. That's where the market share is going. That's where everything is going. So, if you think about that, that is crazy. So yeah, and let's see in the videos. Actually curious who is on top right now between Google and Nvidia. Nvidia is at 5.2 trillion, so they are ahead right now. So two of the biggest companies in the world, at 5 trillion, 4 trillion, and then you have SpaceX coming in at 1.8 trillion as a new entrant into the market. Kind of crazy. So of course, with JP Morgan winning the deal, they're going to be doing a lot of promotion for SpaceX and getting people involved in SpaceX, as they do their IPO soon. So that's going to be really interesting to watch. All these new companies coming to market. I'm not against people, one, having a share into these new companies. I believe in them long term. Now, what happens after the IPO is the people that our insiders, meaning the people that hold a lot of the company shares that have been there from the beginning, are going to be able to sell them. So that does have an effect on the price as you have sell pressure from when those lockup periods expire after the IPO for the key employees, insiders. They have lockup periods on how long they have to hold the stock. It's usually 90 days. And I think in this case of SpaceX, they were able to shorten their lockup period somehow, which will again have sell pressure. So just be careful. Look for dips for people that are actually interested and understand these companies, because it's a longer term play, and not a short term play. You already missed a lot of the jump in the value. The people that were private investors in the early stages are the ones that saw this thing go from a zero valuation to a $1.8 trillion valuation in a relatively short time. So understanding that is key. And here's another talk about concentration that we're talking about. Technology stocks now comprise more than 39% of the S&P 500's market capitalization, raising concerns with that the index has become overly concentrated in a single sector. With tech stocks soaring nearly 47% since March, investors are now weary of potential downturns that could impact broader indexes. Market breadth is narrow, with only 60% of the S&P stocks above their 200-day moving averages. So people are saying, is this a call for rebalancing? Should people be rebalanced? Should the market rebalance? It's so heavily tech concentrated, which makes sense long term, but it's now calling into question how concentrated we are in just tech, right? Like how concentrated we are in just tech. Let's look at the S&P 500 index again, the Spider ETF, and yeah, what it's holding: Nvidia, Apple, the top 10 holdings: Nvidia, Apple, Microsoft, Amazon, Broadcom, Alphabet. It's holding your normal big tech companies. It's holding your normal big tech companies. So it's really just understanding that that's just where things are going. Now, do you want to just be in the Dow and not get a factor of these growth? I don't think so. You want to factor in, you want to have a factor in this growth. Looking at Dow Jones. Now we're looking at Dow Jones factor. Even Dow Jones factor has Nvidia its largest holding, Apple, Microsoft. Then we got Walmart, JPMorgan, Visa, J&J. So again, more of your value companies in comparison to like the big tech flyers. So that's something to keep your eyes on, as people have that conversation, because it's just going to be more and more of a conversation going forward. Because again, I think tech continues to hold the barometer in the long term, and that's where you want to be for longer term growth. Let's look at questions. FIFA World Cup, folks. Let's talk sports. FIFA World Cup is going to be here. I wish I was more of a soccer fan because it's actually not too far here. There would be games in New York and New Jersey, if I'm not mistaken. And I would like to go, but I just don't care that much to go. I'll watch it. I'll watch it on TV just like the rest of us. We'll watch the games together. Soccer is a great global sport. Let's look at the question of the day, though. How much are tickets to the FIFA World Cup match? That's good for us, even though we're not planning to go, but how much? I don't even know. I know the get in prices for New York and San Antonio basketball games for those who are watching. In New York, it's pretty high. It's like $3,000 just to get into the building at a very bad seat for the New York games. I think there was tickets for courtside going for over $1 million for the New York finals game, which did anyone have New York winning the first game? I have San Antonio in six. I think I said this on the podcast. San Antonio in six. I have a future bet on San Antonio. I thought San Antonio was going to win last night. I watched the first half, maybe even a little bit of the third quarter, go to sleep, and New York won. That's crazy. But it's going to be a really good series because New York is also a really good team with really good players. But let's go back to FIFA. How much are the tickets? A few $100s. I don't really know much about soccer works as far as ticketing. Never been to a game. And I'm right. So wait, well, group stage is 700 to 1200. Category two, 500 to 900, and category three, 120 to 200. Group stage host nation. Oh, now it starts getting the thousands. But round of 32, how's it go lower for the round of 32? The final game is the one that we guess we all want. That's going to be 6,000 to 7,000, 4,000 to 500, 5,000, and 1,000 roughly to 2,200 for the finals in the different categories. So I actually need to look up how this even works, the categories, the groups. I have no clue. I'm going to look this up later. But it's interesting enough to know. This goes to play about the inflation and what it is. If you look at these prices 5, 10 years ago, so we always talk about how inflation is linked to asset increase. Dow Jones, this S&P 500 up 30, 40%. If you look at the QQQ on a, which is the tech heavy index on a 10-year, 5-year basis, more than doubled your money. So like that also plays into inflation with the increase in assets. You also have the increase of inflationary prices for different things like tickets, going somewhere, going out to eat. Everything is kind of increasing. So are you prepared for that? That's one thing to think about, the increase of inflation. So if you're thinking about your retirement, what is the dollar going to be valued at 30 years from now? If you're a millennial, Gen Z, how much are you saving? Because $1 million in 30 years, is that not going to be the same thing as it is right now? Trust and believe that. Folks, that's the Your Money Your Life podcast this week. We made sure to go through everything: sports, investing, personal finance tips. Do us a favor, like, subscribe, 5-star rate and review, and tune in next week. We will see you